See how the events in Israel could play out in the markets. Join us now with key technical levels to watch. Mark Newton, Fundstrat Global Head of Technical Strategy, and with the caveat that we are very uncomfortable trying to figure out market reactions to things like what happened, the terrorist attacks over the weekend. But typically, you are able to look back at other incidents and come to some type of conclusion about what market participants can expect. What is that in terms of what you're seeing now? And I guess it depends on what happens from here and whether the war broadens.
Yeah, thanks, Joe. So as horrible as a lot of these events are and potentially could ramp up, my thinking is it is still right to be optimistic. History has shown us that during times of military conflict that market volatility historically has been pretty short-lived. It tends to ramp up fear at a time when people are already very pessimistic heading into the notorious bear killer month of October. So, longer-term technicals really have not shown all that much deterioration thanks to technology. And if anything, that pessimism combined with seasonal tailwinds heading into Q4 make me pretty optimistic that we're in a bottoming process, and it should be a good time for risk assets.
So it works in a lot of different settings. It's the economy, stupid. Bill Clinton said that. He was right. And it's the economy for what determines what happens with the market. Unfortunately, it's the Fed that determines what happens with the economy. So that the real, I don't know, the key point, the key leverages of what moves things is probably the Fed still.
Well,
or
yes.
inflation, or the reaction to inflation.
It's increasingly becoming consensus that the Fed is likely done or might have
Completely.
one more hike.
Yeah, maybe one more.
Usually when that happens, you see interest rates start to peak and pull back, which likely is going to start to fuel growth in technology. Tech has already been a very good sector, but if you look at the economy, it's been it's a very unusual post-COVID world where you have a combination of the housing market where people are not selling their 3% mortgages to buy one at 8%, and you also have a labor force that's still quite unusual in the supply-demand imbalance. So the combination of those, in my view, will postpone any sort of recession, regardless of the 525, 550 basis points of hikes that we've seen over the last 18 months.
So the last couple of points of inflation are going to, a lot of people think are going to be much stickier. We made quick progress. It's going to be more difficult from here. And is the Fed bound and determined to get to 2?
Yeah, my thinking is that crude oil is certainly something we all ought to be concentrating on, obviously, with the geopolitical
labor
conflict.
Labor markets, wage gains, it's all sticky, isn't it?
Well, a lot of the inflation has fallen nearly in half over the last 12 months. Certainly it is at a level where it's not at the Fed's goal, but at the same time, a lot of this stuff, in my view, and I'm no economist, but it ought to figure itself out on its own. Technically speaking, regardless of interest rates having risen, economic data has come in a lot better in recent weeks. So, the Fed is at a tough spot, but at the same time, we do see other evidence of.
Right. So, have we done enough consolidating to we don't go 10% lower? We're near.
I don't think we're going to go 10% lower. Yeah, I think that we got down right near 4,200, which technically is a very attractive area to. It's intermediate-term trendline support. Some people might make mention of the 200-day moving average. I don't use that in my work, but that is something that's here. We also have former February highs. So there's a lot of things that line up towards this area near 4,200. And we've seen a decent little bounce in the last week that a lot of people did not expect and feel like, well, the Fed's going to push us into a recession, and now we have another war. So there's a lot of reasons and good reasons to be concerned about what's happening. History has shown us that it's normally right to put on the blinders and not pay as much attention to those events as to having a real effect on the stock market.